Hello everyone. Good morning to you. Welcome to another edition of our Forex Morning Mastery. In fact, the final edition for the week as we prepare for the final trading day. And of course, we know how today usually is when it comes to the psychology of the market. When it comes to the last trading day of the week, we see market participants start rounding off their trading activities ahead of the weekend. And this usually reflects on the charts in the form of profit-taking activities, where price may start doing some reversal setups as markets take some profit off the chart, which we are also going to be taking into account while we review the current market structure and of course see how we can capitalize on the next move. So far this week, we have been monitoring three financial instruments, which includes the USDJPY, the US crude oil, and of course the gold commodity. And so far this week, we've done fairly well. Unfortunately, I wasn't able to run the Wednesday's trading session, but I did give an update on both my TradingView and Telegram platform as regards how we are going to be managing the gold commodity. And of course, we did fairly well on Wednesday as well. So today we are going to be looking into all of this and see how we can strategically position ourselves as markets round off their trading activities ahead of the weekend. And of course, we have some major event coming up today, which we definitely are going to be taking into account. Now, before we go into that, it's important we also take into consideration the US dollar market dynamic. Of course, we all know how important that is. For those of you who have been following me for a while now, you of course know that there is no way you want to be trading this asset I talked about, that is the Japanese yen, the crude oil, and of course the gold commodity, without really having a background knowledge of what is going on in the US dollar market dynamic. We know that this market has a ripple effect on this major currency assets we are talking about. Now, on the US dollar market dynamic, what you see on my screen right now is the DXY, that is the US dollar index, which gives us an overview of how the US dollar has been performing. And at the start of this week, we were taking into account the character of price action in the DXY since the beginning of July. So we are talking about 6 to 7 weeks of historical data here. And we saw that the dollar appeared to be doing some recovery since the beginning of July. And this reflected on the chart as an ascending channel right here after connecting the series of higher lows. In fact, we have a couple of them. We have the primary one, which is a thick one, and the secondary one, which is the thin one. And if you look at this closely, you will see that price action still remains above the secondary ascending trend line. Though we saw a breakdown of the primary ascending trend line here. We saw the breakdown happen on Tuesday. Then price came back to retest the structure, pushing price further down. But the fact that price still remains above this secondary ascending trend line still gave us some level of hope that buyers still have a chance in this market. We saw what happened here at the beginning of July. Price tested the secondary ascending trend line. It pushed up. We saw the same thing happened during the third week of July, and in the last couple of days now, we can see price still continues to oscillate above that area, giving some room and potential platform that price could rise from that particular area. So in as much as the dollar is looking a little bit weak since the beginning of this week, we will not ignore the possibility of the US dollar rising today. Now, what are the major influence, or what are the major factors that are influencing this particular asset this week? Now, if we look at the economic calendar, we talked about some major impactful events that we are looking forward to, like inflationary data. We were expecting the consumer price index on Tuesday. We were looking forward to the producer price index on Thursday. And from what we were able to get, there is a little bit of mixed data where the consumer price index came in just as market had expected, especially on the month over month, where the year over year came in a little bit short, as we saw a 2.7% actual data. But this, of course, still tells us that inflation is still persistent in the United States. Then on Thursday, we saw the producer price index, another inflationary data, which came in at a whopping 3.7%, higher than the previous month data, and of course higher than the what market participant had expected, making traders rethink how aggressively the Fed will cut rates this year. Now, Fed rate expectations has become high prior to the PPI and CPI, and markets still see a 90% chance of a September rate cut and at least 2 cuts by year end. So if you had looked at the what's the name of this data, this instrument, I've forgotten the name, it escaped my mind now. When I checked it this morning, it shows that 90% of market is expecting that Fed will cut interest rate, and this of course is making the dollar weaker as price continues to trade below that trend line here that we captured since the month of May. Now, with the geopolitical watch on the line right now, we have the high-stakes Trump-Putin meeting in Alaska today. What time is that going to happen? It's going to be happening around 7:30 p.m. UTC. That's about 8:30 p.m. local time. This is one high-stake event everyone is going to be looking forward to, and it has a high tendency of shaking market sentiment, especially if it impacts Russia-Ukraine tensions. Then today we also have a couple of high impactful events to look out for. We have the retail sales data. We also have the a mid-tier economic, the Empire State Manufacturing Index, and of course the publication from the University of Michigan, that is the Consumer Sentiment Index. And inflation expectation later could give the US dollar fresh direction if this data we are talking about comes in higher than what market participants are looking forward to. So today, 12:30 p.m. UTC is the retail sales. That's about 1:30 p.m. local time. Then we also have the Consumer Sentiment Index coming in by 2 p.m. UTC. That's 3 p.m. local time. So let's mark out the timing of this event. And of course, we're definitely going to be seeing market participants anticipate this event. And this anticipation will reflect on the chart as price action. And we are going to be delving into that in a moment. Then another thing we need to also take into account is the risk on mood. There has been positive global development, especially around the US-China tariff truce extension. They've extended this deadline, and it's boosting investors' confidence, which tends to reduce safe haven demand for the US dollar. So in as much as the dollar has some lifeline, it is caught between strong inflation data, which is supporting it on one hand, and rate cut expectation, which is weighing it down on the other hand. And if we also consider the geopolitics and fresh US economic data set to coming up later today, they are definitely going to decide the next move on this asset. Now let's go into the chart and let's see what are the chances that the dollar will rise today or drop today. Now, the first asset we are going to be looking at, of course, as usual, that's what we normally take on, the US oil spot. And on the US oil spot, the market has been quite choppy this week. Sellers have taken a stance at some point, especially during the midweek, and then we saw buyers too at the beginning of the week. Remember, we were able to capitalize on a strong bullish move at the beginning of the week, which we are going to be looking at in a moment. So right here on the 4 hours time frame, we had a descending channel marked out prior to the beginning of this week, and within this structure we were looking at the possibilities of sellers continuing the downtrend, or the resistant line of the descending channel get broken to the upside to give signs that buyers may likely be coming in at any point in time. And during our live stream on Monday, we had a setup we were banking on after capturing a range bound structure. So at the beginning of the week, we had this beautiful range bound where price was initially for the first 10 to 11 hours, price was confined within the $63 and the $62.40 area. And you know how we use our range bound structures. Of course, whenever we identify them, we wait patiently for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, at the beginning of the week, about an hour into the New York session on Monday, we saw price break out of that structure, and in fact it moved about 69 pips in our favor. Remember at the during our live session, we placed a buy stop order above the resistance line, and if you in any way had missed out on that opportunity, the market came back to retest the structure and of course moved about 60 pips before sellers took over the market. So at the beginning of the week, we were able to close in with some small profit. Of course, after moving your stop losses, price closed with about 20 pips thereabout, though not significant, but at least it kept us afloat on the US oil spot. Then we went on to say that the only condition that will make us sell the US oil spot is if price breaks down the support line, which actually happened on Wednesday's trading session. We saw price break down that support line right into the New York session on Wednesday, and we saw a retest of structure to confirm it, and price moved about 98 pips in that direction before it snapped back into entry point. So you can see what happened in the market. The market is a little bit choppy, and due to the fact that there is oil is caught between geopolitics and the next Fed's move, which is not very sure at the moment. Then we also have the Trump-Putin meeting, which could also shake supply expectations. So while the Fed rate cut is there, giving the oil price some support, we also have the situation around the Trump-Putin meeting, which could also shape supply expectations. And of course, from the look of things, if we take these factors together, so for instance, if Trump-Putin Alaska meeting today leads to changes, maybe if there is a positive development in that situation, we could see price of oil drop. But if there is no positive development, we could see the price of oil rise. So what I simply mean here is, if tensions over Ukraine remains, price may rise. If there is progress, price may drop. Now, capturing that with the Fed rate cut expectation in September, which looks more almost certain, like 94-95% of market participants are leaning towards the sentiment, and which could weaken the US dollar and make oil cheaper for buyers, and that of course can support oil to the upside. Now for me, I think we are in a limbo right now. Market are really not sure of what direction price is going to go, and this is evident on the chart. Look at where price action is right now. Price is at $62.63, back into that range bound structure we identified at the beginning of the week, between the $63 level and the $62.35 level. For me, this tells me that there is an indecision in the market. Though we saw price break out of the resistance line at the beginning of the week, moved about 70 pips, and we saw it break down the support line again during the midweek, and it moved about 90 pips before it snapped back into that range bound structure. This for me further confirms that the sentiment is uncertain in this market. And at first glance, when I saw this structure this morning, I wasn't willing to trade the US crude oil. I don't want to place a trade in a situation where the market is still dicey and does not know where it wants to go. Now, for the fact that price now comes back into the $62.35 level, and it appears to be finding some buy pressure here, is this something that we can consider going into today's trading session? Now, to answer that, let's scale down into the 15 minutes time frame. If we could see structural details that can support that idea. Now, scaling down into the 15 minutes time frame and taking into account the character of price action in the last 48-60 hours. So I'm talking about from Wednesday's trading session till this moment, you'll see that oil appears to be doing a recovery, and this is evident with higher lows identified on the chart. Now let's connect the series of higher lows and let's see what we have. We have a beautiful ascending trend line, which we can obviously use to guide our trading decisions today. So if we mark that correctly and allow it to touch majority of the pivot lows, we have something like this. And of course, you can see price is respecting the trend line. It came back here about an hour ago, and we saw a little bit of consolidation, and is right back above the trend line. So you know how we use our trend lines. Of course, as long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. And looking at this area here, I'm beginning to consider buying, considering the fact that price remains above the trend line, and maybe it's something I could risk anyway. Look at this area here. We saw buy pressure resume here yesterday during the New York session. This same area too was a buying niche, and then we can see a hammer candle coming out from that particular area, and look at how beautifully that same level, I'm talking about the $62.50 levels, shares a confluence with that ascending trend line. So with this information here, I want to risk a buy on this position, so I will place a buy right away here. And let's give enough breathing space for price action to move around. So stop losses will be somewhere below the $62.35 area. So I just placed a buy right now. But if you are a cautious type of trader who is not willing to jump in right away, you need some confirmations to happen. Well, you could wait for price to come back, retest structure, where the inability of sellers to break down the $62.50 level could give you a level of comfort to push to join that uptrend scenario. So at this point in time, I think it is reasonable that we consider buying, at least in the meantime, and let's see how far that momentum will go. Will it get back into this resistance line? How many pips are we looking at there? That's about 70 pips if price moves in that direction. So this is potential TP. Today is Friday. We don't have too many hours to stay in this trade for too long. So we are looking at $63.25 level, somewhere around that resistant line where price action dropped during Tuesday stroke. And so let's see how far this momentum will go. So I already placed a buy order, and my position now is currently running with about how many pips is that? About 5 pips now in profit. So let's be hopeful that this will last long. So I have TP somewhere around the $63.25 level, but if I see the momentum gather enough speed, maybe during the next couple of hours, I could extend my TP. But in the meantime, let's have it at the $63.25 level. So there you have it, my in-depth look at the USOIL spot going into today's trading session. Now, let's not forget that sellers still have a chance too. Remember, if the meeting today, if there is progress today, maybe there is signs that there could be some de-escalation in the Ukraine-Russia war, price of oil may drop, okay, because that means that sanctions will be lifted from Russia, oil will be surplus in the market, and due to the surplusness of oil in the market, price may likely drop. So in that scenario, in that context, we cannot ignore the potentials that sellers can also come in. Then secondly, the US economy has shown some resilience. We saw the CPI shown that inflation is still high. We saw the PPI as well, shows the same. And today we are looking forward to the retail sales data and which other event is that again? And the consumer sentiment index. And if this data comes in higher than expected, it could increase the value of the US dollar. And you know what that means to oil. When the value of the US dollar becomes high, oil becomes very expensive for other currency assets to buy, and that could reduce the demand for oil and push price to the downside. Now, if I want to consider selling the crude oil today, of course we want to be selling below that trend line, and I'm looking at this area below the $62.35 level. If we can see price break down, retest the structure, we have an opportunity to risk a sell position and join that decline from that particular area. At the point price breaks down the $62.35 level, it will also have broken down that ascending trend line, making sellers more comfortable to join the decline. So that is basically what I will be looking at to join a sell on this asset today. So let's see how the market is going to play out as everyone look forward to the retail sales, the consumer sentiment index, and of course the Trump-Putin meeting in Alaska today. And if anything comes up, of course I will be updating us on my Telegram platform. So that is my simple view on the USOIL spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page. I hope you've marked the structures out on your screen, on your chart, or probably screenshot the screen so that you can use it as a reference point to guide your independent trading decisions today. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY. That's the US dollar against the Japanese yen. And one interesting thing about this is that the structure we have on the USDJPY is somewhat similar to what we saw on the US crude oil. Of course, remember, after taking into account the character of price action since the beginning of July, we had a couple of ascending trend line on the crude oil. The same thing is also happening here, on the DXY, and the same thing is also happening here around the structure where price action still remains above the secondary ascending trend line. We saw a breakdown retest of the primary ascending trend line. So mind you, the primary ascending trend line is the thick dotted line on your screen, while the secondary is the thin dotted line on your screen. And what does this tell us? It tells us that basically, even though the primary ascending trend line was breached and broken on Wednesday, the value of the USDJPY still has a tendency of rising. Now, the only condition that will make us feel comfortable that sellers have finally come in is for the secondary ascending trend line to be breached and broken to the downside. And for the fact that price is still holding above the structure, I still have a strong feeling that the dollar could still find some support from this particular area. And looking at the fundamental factors, though the US dollar rose a bit at the beginning of the week, thanks to inflationary data, which temporarily lifted the dollar, but Fed rate cut expectation limited the US dollar gains. Now, to further add salt into injury was the data from the Japanese economic docket, which came in very, very strong. We saw Japan's economy grew more than expected in Q2, boosting confidence. The Bank of Japan will stay on its path towards policy tightening, and of course, you know what that means. It supports the yen. We saw a 0.3% expansion in the Japanese economy as against the previous quarter, which was at a 0.1% and even way higher than what market participants were expecting, which was a 0.1%. And of course, we saw the implication of this on the chart. This gave the Japanese yen some platform to thrive on, as we saw the Japanese yen rise on Wednesday, came back to retest structure during yesterday's trading session, and it appears the momentum wants to continue to the downside. But in as much as that is the case, traders are still very cautious, not wanting to take any aggressive bet at this point in time, as they await the US retail sales data, the Michigan Consumer Sentiment Index, and of course the Trump-Putin Alaska meeting, which definitely is expected to impact risk sentiment. So uncertainty or the outcome may drive safe haven demand for the yen. That is very certain, because during uncertainty like this, the yen is also considered to be a safe haven asset, and it could we could see investors rally back into the yen. So for me, I think we are at a critical juncture at this moment. As you can see, price is back into the key level we highlighted at the beginning of the week, which was the 147.00 area. Now, depending on how price reacts to this 147.00 will determine if we will be going to the upside or not. Now, scaling down into the lower time frame, I think I have a structure that will help me navigate the 147.00 level. Let me mark that out first. Let me copy this out, and then let's go down into, I think we still have it on the 1 hour time. I think my structure is on the 1 hour time frame. Let's look at that quickly. Okay, it's on the 15 minutes. Yes, 15 minutes. 15 minutes. So I'm waiting for, okay, good. So we have our 147. This is the key level right here. Price is broken down the key level, right? So this is the key level right here. So this is the structure I was able to mark out on the 15 minutes time frame after considering what has been going on in this market since Tuesday's trading session. It is quite obvious the market has been on a downtrend since Tuesday, as we saw lower highs in this market, resulting in this beautiful descending trend line I marked out here. And look at how price action had been respecting that trend line since Tuesday's trading session. But something interesting happened yesterday during the New York session, where we saw the US dollar rise and break out of that descending trend line for the first time since Tuesday, thanks to the very strong USDJPY data we saw yesterday. And since then, price appeared to be retracing back into structure, which lines up with a theoretical expectation that when price breaks out of a key structure like this, it is likely going to come back, retest the structure in an attempt to continue the uptrend scenario. Now let's zoom into what has been going on here in the last 1 to 2 hours. Now price is back into the trend line, right? And as soon as price came into the trend line, what did we see? We begin to notice buy pressure resume from that particular area, showing that buyers are probably building on momentum again to continue the second leg of the bullish move we saw yesterday. And for me, I'm beginning to consider buying the USDJPY, considering this technical structure. And another thing is that the risk reward ratio is very, very good, because we are just right around that confluence where the 146.700, a level which has been respected since last week. We saw that same area serve as a demand zone where buyers came in to push price up. Look at what happened from that particular area. On Thursday last week, we saw price come in from that area to push price up. We saw the same thing happen on Friday last week again. Price climbed up from there, and we saw we can see something like a reversal setup. We could call it a double bottom, an inverse head and shoulder, whichever case it is from your own perspective. But the fact that we have a reversal setup here, price breaking out of the neckline, and that same 146.700 area is looking as if it wants to become a support zone again to push price to the upside. So for me, I'm beginning to consider buying from here. I will just place a buy right now, not a buy stop, a buy right away. It's close to the confluence, and of course my stop loss will be smaller if I do it from this particular area. So I will place a buy right here, and of course I have enough breathing space for price action to move around, so I can have my stop loss maybe somewhere around the 146.550, as you will see here. So I just placed a buy. Check the bottom of your screen, you'll see it there. I just placed a buy from that area, and let's see how far this momentum will go. Theoretically, if we use our Fibonacci extension tool, let's say we run it through the previous impulse leg, we should be aiming at an area between the 127.2 and the 1414 area as our TP target, right? So that's between 148.450 148.450 and 148.700. So we could have our TP around that area. That's theoretically, but I'm not sure price will move that far, considering today is Friday. How many pips is that? So we are talking about a minimum of 150 to a maximum of 180 pips to catch there. But if we are not too ambitious, maybe we are looking at this resistant line here at the 147.950. That's about 100 pips thereabout, which is looking reasonable. I will place my TP here, and if along the line I begin to notice that the momentum is getting stronger, maybe the retail sales data comes in higher than expected, or the consumer sentiment index comes in higher, I could extend it into that theoretical zone around the 148.450 and the 148.700. So on the USDJPY, based on the structure and considering the recent inflationary data in the United States, let's hope that this confluence here becomes the platform that will incite the second leg of the bullish momentum we saw here yesterday. Now, in as much as that is the case, you know how we do it in this community. We always try to keep a balanced approach. So as we look forward to potentials for buyers to come in, we also take into account the fact that sellers can also come into play. We just talked about the Japan's economy growing more than expected in Q2. We saw, which of course could increase the expectations that the Bank of Japan will want to increase their interest rate. These two factors here has a chance of giving sellers some room to thrive. Now, if that is going to be the case, where will be most likely to join a sell? Of course, we'll want to see price back below this descending trend line before we want to start considering selling. That is seller's territory for us. This trend line has been holding that bearish pressure since Tuesday's trading session. So if price can drop below the trend line, then we can start considering selling. And look at how beautifully that trend line lines up with this 146.700 area. So if I want to consider selling, I would like to see a breakdown, retest of this particular structure before I jump into a sell. So we want to see price break down the structure, retest it maybe a couple of times, and then we can now join the sell. So the area of focus for today's trading session is between the 147.00 and the 146.700, where depending on how price reacts here will determine if we are going bullish or bearish. But in the meantime, we've bought the USDJPY, and if I can see price break above the key level, I will feel more confident that buyers have come here to stay. So that is my look into the USDJPY. If you have any questions, feel free to let me know in the comment section. So I will take another 5 to 10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. Stay tuned in. All right. I guess we are all good, and structures have been marked out accordingly. We have a simple setup on the 15 minutes time frame. Let's allow the structures to play itself out, and we already have a buy, hoping that this descending trend line becomes a form of retest of structure to drive the second leg of the bullish momentum that started yesterday. And we are only going to consider selling if price breaks down, retest the 146.700. So let's mark the structures out and let's see how things will play out. If anything new comes up, I will update us accordingly on my Telegram platform. So moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a week it was for us. We started the week on a strong bearish note, remember. We saw price break down our primary ascending trend line just right around our key level at the beginning of the week. That was the $3,380 level, and we saw price move over 450 pips to the downside before indecision gripped the market. And since price dropped into the 3,330 zone for the last 2 to 3 days now, the market has been consolidating, showing us signs of prevailing uncertainty at this point in time. So Monday, we sold the XAUUSD, excuse me, and on Tuesday, I updated us with a new structure, which gave us an opportunity to buy the gold commodity. I shared that with us on my TradingView and Telegram platform. It was this simple setup here. We had the range bound structure on Tuesday stroke Wednesday, giving us signs that there is a prevailing uncertainty. And of course, I mentioned that we are going to be buying the breakout retest of this particular structure, and we saw price move over 150 pips before sellers came in to push price to the downside. And for those of you who capitalized on that opportunity, well done and kudos to you. So right now, gold is under serious pressure from the recent strong US inflation data and upbeat market mood, while the capping, let me use that word, of the US dollar gains and Fed rate cut expectations offer limited support to this particular asset. And now everyone is looking forward to today's US economic data and geopolitics. I'm talking about the Trump-Putin situation, which could set the next or set the tone for the next move. Now, in preparation for today's trading session, and I have already updated us, for those of you who are following me on both my TradingView and Telegram platform, you must have seen that we have a new setup which looks more like what we're seeing on the USDJPY, where since Thursday's trading session, that was yesterday, price action has been finding some lower highs, right? We see price dropping below this trend line, and not until the Asian session we saw price break out of that descending trend line. And since the breakout happened, the market has been consolidating. As you will see, price is currently trapped between the 3,347 and the 3,340, a $7 range bound structure, emphasizing the prevailing uncertainty at this particular point in time. Now, with the situation we have here right now, what are the chances that buyers can thrive from here, or what are the chances that sellers can also come into play. Now, since we have a breakout of the descending trend line, this one I just highlighted here, theoretically speaking, it is expected at some point in time price is likely going to come back to retest that trend line in an attempt to continue the uptrend move after gathering some liquidity. And that is why I have marked out this area between the 3,324 and the 3,332 as a demand zone where we could be looking out for buying ideas if price drops into that area. So if price comes in here, we want to be looking for reversal setups like double bottom structures, inverse head and shoulder pattern or falling wedge, which could help us to capitalize on that rebound if that will be the case. But if you're a day trader or a scalper, you could also look at the chances of joining that move all the way down into this area, and we're talking about between 100 to 130 to 40 pips if price moves that far. But now we don't know if it's going to do so, and in fact we are at a crucial juncture where price in the last couple of hours has been oscillating within the demand zone, or let me say the support line of that range bound structure we talked about here. So if you look at the structure closely, you can see since 4:30 that's price sellers have been struggling to break down the structure, as you will see here, though we've been seeing some tendencies of this breakdown to come to fruition, but buyers are still holding their stance, trying to push price higher. So for me, because of this support line here, if you look at the bottom of your screen, I placed a buy position which is currently running in a loss. I placed a buy here with the hopes that we could find a support line that maybe could bring price back into the resistance line or break it to continue that uptrend from that area. So let's see how this one is going to play out. Let's scroll down to the 5 minutes time, but let's see what's happening here. Since on the 5 minutes it appears we have a demand zone where we could have a stop loss of about 20 pips. So if you're a day trader, you are a scalper, you might want to be capitalizing on this short-term opportunity that is looking promising here. Maybe have your buy stop order above the 3,340 zone, which is something we could want to consider from here. Hold on a second, please. So we could consider something from that area that's above the 3,340, and then if you are comfortable with a 70 pips move with a stop loss of about 20 to 25 pips, that's a good risk reward ratio if you ask me, and then you can join that move to the upside. However, sellers are still very strong here, and I'm looking at this area around the 3,338.50. Let me mark that out, 338.50. Hold on a second, please. So, hold on, I wanted to label the 338.50. Okay, so if price breaks down, retests this 338.50, it could incite a sell-off. Hold on a second, it could incite that temporary move to the downside. Hold on, let me see. Oh yeah, okay. So we could see it move to the downside from there. So place a buy stop order if you are a If you are a scalper, you want to scalp, you can place a buy stop order above the 3,340 34-cent level. Let's see how far that will go. And you can also, but for the sell, let's wait for confirmations to happen. That is a breakdown retest of the 3,338.50 before jumping into a sell into that downside. And we are talking about between 100 to 130 pips. But from the bigger picture, I'm looking at buying here if price comes in here to form a reversal setup. Okay, if it forms a reversal setup here, I'm willing to buy from that particular area. So let's see how the market will play out. The critical juncture here is between the 3,340 and the $3,338.50 level. Depending on what happens here will determine if we are going up or we are going down in the next couple of hours. So while the position is building up ahead of today's economic event, let's mark out the structure. Let's exercise patience and wait for the structures to mature before jumping into any positions. So there you have it, my look at the XAUUSD for today's trading session. I hope I made myself very, very clear. If I didn't and you need some clarifications, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to round off on today's Forex Morning Mastery. Hello, Soldier Pete. I see you. Soldier Pete, I see you. Good morning to you. Glad to have you around with us today. Trust you are doing very well. Today we were able to take on all the 3 financial instruments on our watch list today, which includes the USDJPY, the US crude oil, and of course the gold commodity. And we were able to mark out simple trading setups that we are going to be using to navigate the market today. And I do hope you are able to mark out the structures accordingly on your screens, on your charts. If you did, well done and kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And for those of you who are joining me for the first time, I do hope you are able to gain 1 or 2 things from our discussion. If you did, you want to be part of our subsequent editions, as the more time you spend with us here, the better you get to comprehend my analytical approach. So the next session is going to be on Monday as always, 9:30 a.m. West African time. That's 8:30 a.m. UTC, where we are hoping to start the week on another positive note. And if you are yet to subscribe to the channel, please do right away, as I will be sharing some market updates for the week. For the week ahead, especially on the gold commodity, what my plans are going to be looking like. So stay tuned in, subscribe to the channel so you can get notified as soon as I drop these ideas. Then my Rebuilding the Traders Within series is still ongoing. We are currently on episode 5, right? And I will be dropping episode 6 on Saturday or Sunday. So stay tuned in on that one. This is another mind-boggling series I'm going to be dropping on Saturday or Sunday. So please stay tuned in on that one, and I look forward to hearing from you guys. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys, and it's on this note I wish you all the best of luck today. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. So I wish us all the best of luck today. Wish you a very beautiful weekend. Trade smart, trade consciously, and do have a wonderful evening. Bye.